So the Fed, as expected, no change in interest rates. Hardly surprisingly, Jay Powell says, yeah, I do see some inflation coming with these tariffs. Let's get more from Laura Lau, Chief Investment Officer at Brompton Group. Do you pay a lot of attention to the Fed these days? Is it an important driver for the markets?
I'd say yes, the Fed is an important driver for the market, because when the Fed does start decreasing interest rates, I think everybody will breathe a sigh of relief. However, it also depends on why. If they do cut rates, it means they do see the economy slowing and the Fed's worried. Mm-hmm. So this means just business as usual, and the Fed does have to watch out for whether it be inflation from tariffs or inflation from higher oil prices. So it makes sense to pause and just wait and see, how the dust settles. And the other thing is the big, beautiful bill. Mm-hmm. How is that going to be inflationary, deflationary? Nobody quite knows until that crosses the finish line.
And the amazing thing is this so-called revenge tax, whereby investors could be penalized for putting money into America if Washington doesn't like our domestic tax policies.
So it's very confusing, because on one hand, Washington's like, we want you to relocate in the U.S. America's great. And you're like, on the other hand, if I relocate a factory, you could tax me on it. So they're sending mixed signals.
What about your allocation right now? Are you big in cash in your equity portfolios? Have you been cutting back?
We have a little bit of cash, a little bit more than normal, just to see how the market settles, especially since we are pretty well at highs for most markets, U.S., Canada, Europe. So we want to see how the dust settles, because any little wobble, we think the market could be quite vulnerable now. And there's a lot of news on the horizon that we need to be resolved, whether it be, Iran, Israel, whether it be tariffs, whether it be, as you said, the revenge tax, the big, beautiful bill. And it's summer. So there's just a lot of things on the horizon, and we do expect the volatility that, we had a lot of volatility into Liberation Day, came down, and we expect that volatility can increase again.
The oil, you have devoted quite a bit of your career to focusing on oil. It's had this bounce in part because of fears over supply from the Middle East, although there hasn't been a direct damage to export facilities significant that I know of.
So right now there haven't been. So there are some very vulnerable points. One of the most vulnerable points would be the export terminal from Iran. 90% of the exports go through there. So I think that, Trump does want lower oil prices, so I think he's told Israel, don't bomb that. But we have seen some bombing of energy infrastructure, some of the local stuff, but nothing major. And also in 2019, we did have some of Iran's proxies bomb some of Saudi Arabia's oil facilities. So that could still be on the cards, but the big one would be the Straits of Hormuz. And that's really important, because 21% of all the oil moves through there. And we have seen Iran target that before. So there is reason to be cautious. So as I said, they haven't targeted yet, but I do believe the risk of this war escalating gets higher every day.
Yeah, you don't, even though apparently the Iranians have, by back channels, sent signals, we'd like to talk, but Israel's not holding back on its attacks.
So I kind of understand that from both standpoints. So Israel is in an existential crisis. Basically, the United Nations has confirmed that Iran is close to building a nuclear bomb, not just one. 9 nuclear bombs. And if they get a nuclear bomb, they do have the missile delivery systems to send them over to Israel. And Israel has weakened Iran. They've weakened their proxies, and they feel this is the time to strike. And I understand that. And then on the other hand, nobody really wants Iran to have nuclear weapons, whether it be, Saudi Arabia, U.S. I don't believe Russia or China want them to have it either. So at the same time, if you don't strike now, when do you strike? Because this is the weakest we've seen Iran in a long time. Yet Iran, of course, is fighting for their lives as well. So it's difficult to see an off-ramp.
Yeah, that's difficult. There's speculation, of course, the Americans might join in the attacks on Iran.
Yes.
Maybe to go into that big buried nuclear facility, the Fordo one that the Iranians have.
Yes. So basically, one of their most advanced nuclear facilities is very deep underground. And to penetrate that, the U.S. does have a weapon. They do have that bunker buster that penetrates deep, and the B-2 bomber. And we've seen the B-2 bombers are within striking distance of Iran. They are moving jets closer and closer to Iran. They're moving aircraft carriers, ships. So that's why I do see that this war seems to be escalating. And to take out those nuclear facilities, you either have to bomb it with those B-2 bombers or a land attack, which would be even bigger escalation.
You have a couple of stock ideas for us. One is involved in defence. BAE Systems of Britain trades in London. A lot of money managers like you are looking anew at the defence sector. We've
actually owned BAE for many years.
Oh, okay.
Because we did foresee that Europe would have to increase their defense spending. And also, we've had a number of years with the Ukraine-Russian war. And we've seen all their neighbors rearm. And we expected that Europe would have to rearm. And we are seeing that. We do believe that defense budgets all across Europe will be increased. Germany's already told them they're prepared to spend, and it doesn't matter what it's going to do to their debt. They're willing to spend. And also we're seeing the U.S. is also increasing military spending. So that's why we did like BAE, and they do play in a number of, they play geographically in U.S., Europe, Saudi Arabia, and they play in a lot of the key systems, whether it be electronic systems, cybersecurities, the F-35 fighter, tanks. So they play in a bit of everything. So we like that mix.